What's up, everyone? Welcome back to the channel Smart Waves. I'm your host, and today we're diving into a short to midterm Elliott wave analysis of the crypto total market cap, breaking down the weekly and daily charts to map out the market's next moves. This video is your roadmap for navigating crypto's near-term trends. So, grab a cup of coffee, hit that subscribe button if you're new, and let's ride these waves together. Okay, so without further ado, let's jump into the weekly chart of total market cap on the crypto market to gain a midterm view on what the possible scenarios are. So this is the weekly chart, and if you remember, we have done a previous video on this total market cap on the monthly time frame, which was called the crypto total market cap big picture. Make sure to check that video to get a sense of what we're doing, because the big picture count up to this point down here, is all explained in that video. I'm gonna put a link in the description so you guys can access that easily. Now let's move on. This is the count that we are considering for this move, and I explained it in the previous video as well. This to me is a corrective W, and then this is a corrective X, and we could be possibly in a wave Y, which could actually include a secondary X and a Z, but this is not the subject of this video. We're going to focus on this price action, see what's going on here for the possibilities of further upside for this market. Now, yeah, so the first leg right here gave us a correction about, let's say, 50%. So after this first W, we corrected 50%. And let's actually check the smaller scale moves, check their correction levels as well. So the first W corrected around 50%. Now the leg Y, we could say, corrected about 40%, which is pretty usual for leg Ys if they are heading for an X. And after that, we talked about this correction. Now, the first blue W leg of the secondary bigger Y. Let's check the amount of correction we have experienced right there. Yeah, 62%. Very popular fib level right here, which could be telling us that the leg X is over. The first blue X is over right here. And for the bullish case, which actually implies that we're going for a blue Y, could have an invalidation level of, let's call this the invalidation level. So I'm going to move this right here. Actually, I'm going to delete this and call this the invalidation. So yeah, if we have a weekly close, if we have a weekly close below this level, we could say that this count and a scenario for the midterm is invalidated. But for now, we're just considering bullish market. And some could say that this is the main trend and it's just a pullback, and if we are quite likely to go further down from this level. We could draw the same fib levels right here. So this would be the invalidation for the bearish case. Let's call that bearish case. So this is it. This is the invalidation for the bullish case, and this one belongs to the bearish case. So if there is a weekly close above this, we could say that this right here was just a correction. So now we can call this first leg up W, the second one the correction X, and now the main trend continues. And the reason we're calling them all corrective structures has been mentioned in all my previous video. It's about videos. I mean, it's about the way we count the modern markets. So, yeah, basically, this would be the validation for the bearish case. But now we need to move on to the daily chart to further investigate this move and find some potential zones to enter the market to capture the move to the potential leg Y right here. So in the next part of the video, we're just going to do that. So I have switched to the daily time frame to check this move. Um, as you can see, I have labeled this as a complex WXYXZ. And if you are a fan of Elliott wave analysis, you could see actually some people labeling this as 1, 2, 3, 4, 5, something like that. But here's why this doesn't really sit well with me, because when you look at the targets for wave 3, as I have drawn this before, you could see that the supposedly wave 3 hasn't touched fib level 1 and let alone 1.62, which is the usual target for the wave 3. So to me, this is not an impulsive move, just like any other move, major move in a potential modern market. So that's that. Now, based on the price action analysis, right here we had a daily supply because of this breakup structure and because of this inefficient move down here. So this supply zone was quite important for us, but we have broken through this with a couple of decently powerful candles. So this move right here makes this zone, after a breakup structure, a very important zone. It's a demand zone, but it has broken through a potential supply zone. That's why we're going to call it a daily flip zone, which is very attractive for us to enter the market in case the price corrects down to this. Now, after that, I mean, actually, before that, we had another breakup structure and another inefficient move. As you can see, these moves are all inefficient. And it just tells us that there is another demand zone down there. So for me, in case the price corrects to these two zones, it is very attractive to enter the crypto market for the potential blue Y leg that we talked about in the previous part of the video in the weekly time frame. And the stop loss, if we enter any trade for midterm, would be, yeah, let me just check this out. Yeah, the invalidation level would be this Fibonacci level. So invalidation for daily entry, I'm going to call this. If there is a daily close below this level, this count and this scenario is invalidated. But considering the weekly chart and what we discussed right there, so let me just turn this back on. This is the weekly chart, right? I mean the levels that we talked about on the weekly time frame. So the most attractive case for me personally would be a breakout of this zone and then a retracement to these ones. And if we have a breakout of this invalidation level for the bearish case, we could actually enter the market with a higher potential of profit. Either way, even if it doesn't happen, if the price comes down back to these zones, as you can see, this flip zone right here sits well with the first Fibonacci level for wave X, so it's quite attractive. The second one as well, and both are above the invalidation level for the bullish case. I mean, this is the invalidation level for the bullish case on daily, and we talked about the invalidation, which is down here for the weekly chart. So yeah. Yeah, that's it. So short term, I expect the price to retrace a little bit, and maybe in a upcoming couple of days we still be bullish and we go hit this level, but doesn't matter. What I'm looking for is a retracement to these two levels to enter the market. Maybe a bigger chunk of the entry should be done here because this zone has more prominence to me. And yeah, so that's it. That's our short-term to mid-term view for the crypto market cap. That's it for our short to mid-term Elliott wave analysis of the crypto total market cap. To sum it up, I'm expecting short-term corrections that'll give you prime opportunities to jump into the market for a mid-term bullish run. Which entry points are you eyeing? Drop your thoughts in the comments. Hit that like button if this helped, and subscribe with the bell icon for our next crypto breakdown. Thanks for watching, traders, and I'll catch you in the next one.